Welcome to another edition of DAC FP TV. I'm your host, Don Friedman, President of the Digital Assets Council of Financial Professionals. Today we have Pedro Palandrani, Associate Vice President, Research Analyst at Global X. Pedro, welcome to the show.
Thanks for having me, Don.
So let's jump right into this. The first question we have is, with the rapid growth of cryptocurrencies and high expectations for blockchain adoption in other capacities, investors are increasingly looking to gain exposure to this theme. Instead of investing directly in cryptocurrencies, what is Global X's option to gain exposure to blockchain technology?
Yeah, I think that for investors, it's important to recognize that just as email is one application of the internet, cryptocurrencies are just one application of blockchain technology. And, just because of the immutable properties of blockchain, of course, in addition to the transparency, the security, the accuracy, we're seeing applications of blockchain technology in things like smart contracts, supply chain management, more recently, things like NFTs. And these are applications you cannot do in a traditional computing system of network, right? So sort of the best analogy I heard is that, in the era of the iPhone, when it came out in 2007, it was really hard to predict what was the best application of the technology at the moment, right? It was hard to think about the ability to ask for a ride, geolocation data, or just simply enabling social media platforms like TikTok today. So that's sort of what's happening today with blockchain technology, where we're just starting to see many applications being used with that technology, right? But clearly, with blockchain, you have Bitcoin as the best example. Essentially, Bitcoin derives the value from the scarcity of Bitcoins. And, there will always be only 21 million Bitcoins, and that property of guaranteeing that there's always going to be 21 million Bitcoins is derived from the blockchain technology. It's not derived from the creators. It's not derived from the developers. It's not guaranteed by users. It's really guaranteed by the very network of the technology, right? So that never existed before. Before, if you had a large internet company like Amazon saying that they were going to launch an Amazon coin, for example, and that coin will only have a 21 million coins, that could always change. That's ultimately something that it's controlled by a person, and that person could change their mind, right? So given this broad reach of blockchain technology, going back to your question, we recently launched a blockchain ETF, the Global X blockchain ETF, ticker BKCH, which is essentially seeking to invest in companies across the blockchain supply chain, right? You can think about cryptocurrency miners, which are foundational for Bitcoin. Also companies in the digital asset transaction space, companies like Coinbase, more recently companies like Square and PayPal. We're also looking at companies in blockchain and digital asset hardware. You can think about the companies that manufacture the hardware, the application-specific integrated circuits or ASICs that are also foundational for mining activities. And finally, we're also looking at companies in the digital asset integration space and application space. So, really a very robust way to get exposure to multiple verticals that are very well positioned within blockchain and digital assets.
Great. And speaking of mining, that kind of leads into our next question. Crypto miners have been called bad for the environment. Is this really true?
Well, on this topic, I'm going to have to disagree with Elon Musk, with all due respect. He and others believe that miners are terribly bad for the environment. But, if you look at crypto miners, they're really incentivized to use renewable energy sources for their operations. If you look at the numbers, and I'm a numbers guy, I like to look at that, about 76% of miners today use renewable energy as part of their energy mix, with renewable energy accounting somewhere around 40% of the overall energy consumption. And of course, there's room for improvement, but the incentives are there. That's simply because today, if you look at new solar PV or onshore wind power, for example, these are costing less than keeping many existing plants or coal plants in operation. It's really making renewable energy consumption increasingly favored by these cryptocurrency miners, because one of the major operating costs for miners is electricity. So if you look at the grand scheme of things, Bitcoin's consumption of electricity, which is about 90 terawatt hours per year, that only represent about 40 basis points of the total global electricity consumption. So the numbers are there, and I think that's a kind of the data that we can definitely provide.
Excellent. And lastly, beyond mining, the growing interest in cryptocurrencies has caused many fintech companies like Square and PayPal to shift their product offering to accommodate cryptocurrencies. What can you say about this?
Yeah, Square, I think they launched Bitcoin trading through their Cash App back in 2018. It's been astonishing, the growth of the segment for the company. Just looking at the cumulative revenue generated through their Bitcoin offering since they launched it, I think it totaled around $11.5 billion as of Q2 2021, and that includes only $6 billion in 2021 alone. So clearly, the level of adoption continues to increase over time. And this is an area of growing interest, given that these companies can do a lot more than just facilitate buy and sell transactions. They can actually be leaders in what is called the broader DeFi world, right? If you look at Coinbase, for example, they could lend cryptos, they could offer interest-bearing accounts. Right now, they're offering a 4% APY on USDC, a stable coin. They're offering custodial services. They could offer debit and credit cards and many other services. So this is really an important and growing segment within digital assets.
Well, Pedro, thanks for your insight and thanks for being our guest on DAC FP TV.
Yeah, great being here.